tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right. Hello. What's going on? Yeesh. That is a lot of transplant. All right. Prayers for Kathy's brother-in-law. Hello, hello. Okay, let's do this. If you have questions, throw them in the chat. Other than that, we're going to do a, hey, Tom. We're going to talk about the power of game theory, cognitive bias, and compound interest. Rather than the Rube Goldberg machine that is current investing. Spray and pray, hopium, bull crappy, garbagey, dumpster fire gambling. YOLO meme coin gambling. Other than that. Hello, hello, hello. All right, so Terry is having a double lung transplant. Oof, that's a lot of stuff. Well, hopefully soon, AI and machines and robots, and you'll just be able to grab another body that you have on ice that's been cooking, it's been simmering, it's been growing, or just take a robot body, which I think would make more sense. Hello. Let's see, forward an email on what looked like a MetaMask scam. If you find a MetaMask scam, don't forward it to me. I don't want a forward of your scam, man. Just get in the chat and say, be careful for MetaMask scams. That's like the joke, like the guy that walks up to you with a pile of crap and says, look what I almost stepped in. No, don't send it to me. I don't want it. Not answering your emails. I'm not even clicking on them because now your emails are suspect. All of them. All right. So good morning. Good morning. All right. We'll look at markets. We'll just look at them. Let's see. Bump, bump, bump. All right, let's get on over here. Let's get on over here. See what the old corn is at. Is that accurate? That's the 12. Let's go 24-hour. Is that accurate? It's going to bump me out. Oh, there we go. Nope. It's back. It's fourth. It's up. It's down. Oh, man. It did its crap again. Hold on. Give me a second. It's being crappy. I don't know why sometimes when you refresh, it just decides that that's the time that you need to be logged out. That don't make no sense to me. Can't refresh my screen. All right. Okay, so 67.4. Bam. That's where we're at. Okay, what's going on? Not a whole lot. Still kind of quiet. That's the wrong layout. Let's go to the digital investor layout. By the way, for those of you that don't know, when you're on the website, here you can customize your layout. And so this is the digital investor layout. The one that I have is, and you kind of have to do it in order. I do these first. So, but then I have an all-time high, a market cap, and obviously it's got the current price. So that's the one that I do. Those are the ways that I look at this so that it creates this chart that has the 24, the 7-day, the 30-day, the 90-day, the 1 year, which gives you a good idea what's going on, total market cap. Now, that's just a good way for me to kind of judge these things. So we had the up day, then down day yesterday of the of Jerome Powell's, constantly moving target. And, the interest rates, everybody's, we're hanging on the interest rate cuts and all this kind of stuff, which don't do anything. And so he said, we're only going to do one this year. Of course, it's going to come coincidentally, after the elections, wink, wink. We'll see about that. I surmise that he will not be able to wait. They won't, that the jobs numbers that they're holding on to, even he suspected they were a little bit sloppy. But when those things get revised down, and they will, really low, and we get some more deflationary, kind of news, and there's more stress in the business sector as far as like commercial real estate, that would bleed into regular real estate. I mean, any of these markets, if they get nuked, they bleed into the other markets. So there'll be a lot of cross-pollination of bad juju. So I would think, at least from the Fed, they're not going to cut one time this year. They're going to cut the second the information turns bad and people start questioning how awful they are at managing an economy. And the answer is they don't manage an economy. So there you go. Yeah. But yeah, that's it, right? Like, how many times do you have to change the story when you're lying? That's why in a script, when you're writing a script and you're going from the original source material, like a book, you go, you have to be careful that you don't start making things up. Don't tell lies when you're adapting a book, because then you forget which lies you told. And you got to tell more lies to cover those lies. Pretty soon, it's just a big old ball of lies, and you don't remember anything, and you can't go back to the source material because you left it. Stick with the source material. And in the case of regulators and, well, the Fed they're not regulators, but in the case of those who would be in charge of monetary policy, why don't you stick to the actual data, and then don't just change the data that you look at every few weeks when that data turns out to not agree with your theories. So that's all I have to say about that. So anyway, but I don't think that that's going to truly affect. I think the main Bitcoin driver is not the greater economy right now. I don't think anything about the greater economy is really surprising anybody. I think this is a story of miners capitulating, going out of business, selling what they've got. I thought it was very suspicious that Bitcoin got to 71.9 and didn't quite get to 72,000. So my guess is you had a lot of people that were short, that were working with miners, and they were telling them, sell, please, sell everything you got. Sell. And so that they wouldn't get nuked on the covering side of that. But there's no way to ever know. You can't ever know what kind of back alley deals are being made and all this kind of stuff. Any kind of financial market, someone's going to try to pervert it. So that it is. All right. Anyway, 67 is not terrible. Still up 160% on the year. Pretty cool. Ethereum, quiet, but we're waiting for S1s to come home. And then, we should be there. I think that would be something that makes a lot of sense over the next 12 to 18 months. I mean, I don't know how you would imagine that a spot ETF that allows a bunch of, Joe Six-packs and retail traders to finally have exposure without having to open up a Coinbase account and do all the kind of silly stuff that we did. I think that would be pretty positive for the industry. And it's also pretty clear to me that there's no other ETFs coming anytime soon. So we'll see. And yes, on ASI, they delayed that to the 15th of July. And I would assume that they may or may not punt there either. And of course, it's no one's fault. In all the groups, everyone's saying we're all ready. The SNet team, they're ready. Singularity DAO, they're ready. It wasn't us. And the people at Fetch were like, well, we're ready. And the people at Ocean were like, well, we don't have anything to do with this anyway. We're just on the sidelines, but we're ready. Isn't it weird that everybody's ready? And yet, maybe the exchanges just weren't ready. Maybe that's it. Maybe this is just an exchange issue. Yes, everybody's ready. You got your keys? Yeah, I gotta get here. Let's go. Everybody get in the car. Who's gonna start the car? We can't start the car. Why? Do you guys know how to drive? Yeah. We always know how to drive. Everybody ready? We're ready. Oh yeah, Mario's ready. He's 100% ready, like he always is. How'd that twin launch go, by the way? The one that was going to launch in January. Oh, right. Everybody's ready. And no one will take responsibility for not being ready. Just say you're not ready. Just say oh, we can't. And give a reason. So, I don't know. Doesn't matter. Idia what idia. But the world will move forward. So, what's going on in the rest of the market? XRP. Oh, man, they got Ripple's doing a new thing. Cross-border liquidity. No. Sophia. No. ASI Day is the 15th of July. Hello. Yeah, so a bunch of new uses for on-demand liquidity and what is it? Illiquid exotic corridors. Stop. Brad, Garlinghouse, Chris, Grand Larceny. Stop. All of you stop. David Schwartz. This guy, I used to have some respect for this guy, but now his whole thing is, I forget what term this is where you're basically gaslighting people. Like, everyone knows he's not intellectually capable. He's not capable of creating something like Bitcoin. He's not capable. He doesn't have the technological savvy. He is just not enough. Yet, his funny thing, I guess he thinks it's cool with his hair that's never been washed, is to go on Twitter and say, for the last time, I am not Satoshi. Yeah. Hey, David, no shit. No one on earth thinks you're Satoshi except some stripper at a bar that you went to and she's like, what's Satoshi? Is that a VCR player? No one thinks that David Schwartz is Satoshi. Stop it. So this is his new thing, like on Twitter. I'm not Satoshi. We know you're not Satoshi. Everyone knows you're not Satoshi, especially Adam Back, who is part of Satoshi. Boy, I tell you what, man. If I was part of the original team, I'd be pissed. Like douchebags like that. Anyway. So yeah, nothing happening at XRP. Mind the news. Every now and then you'll see these news articles. XRP setting up for a run like in 2017. No, it's not. End of story. Dogecoin. Does Elon own it? Probably not. He'd probably be in big trouble if he did. But does he seem to pump it every now and then? Yeah. Yeah, he does. Why? He thinks it's cute. He thinks it's funny. I don't know what to tell you. All right. Cardano. Anything going on over there? Well, they would tell you that a lot of things are going on. And if you look at the GitHub, if you look at their repo, yeah, a lot of stuff. They're pushing a lot of code, a lot of commits. There's a lot of activity. and none of it moves the needle. It doesn't move the needle because it either isn't causing the hoarding effect, or the fees are so efficient that you don't really need that much Cardano to do transactions. You see, you have to hold a lot more Ethereum. Think about this. Maybe the reason that these other layer ones aren't so great as far as an investment is because they don't generate very much in fees, because they're efficient. And if they're efficient, and this was my pre-ETF argument about Ethereum, and eventually it is still my argument, is that if Ethereum gets efficient, you wouldn't have to hold as much to do transactions. If you don't have to hold as much, the price should be nowhere near $3,500. It should be about $150 or $15 or $1.50. If these things are truly as efficient as they would like us to believe, they just shouldn't cost this much. Anyway, there you go. So I think a lot of the other layer ones, they may actually suffer from that. Now, the difference with Solana is Solana's kind of in that weird, it doesn't really work that well. It's really fast until it breaks. It breaks all the time. Tons of failed transactions. Don't even go into the background of who pumped it and the very weak intellect on that design team, and just poor design considerations. Just all around, it's sloppy. But it's a kind of sloppy that VCs like, and it's kind of sloppy that meme coin douchebags like. Yeah. So there you go. Yeah, and Raoul Pal likes other things that Raoul likes. He liked Celsius. He was a big fan of Luna. Matter of fact, while Luna was crashing, he was on a live stream talking up Luna. Because Raoul doesn't know effing math. He does not know math, which, you'd think for a guru of his caliber, he should, know math, like numbers. Yeah. So anyway, there you go. All right. Carrying on down. So that's the layer one discussion. Polkadot, no one cares. It's far too complicated for anyone to really care about their whole parachain and their auctioning system and all that. They got to just dispense with all that. If Polkadot was smart, they would create some kind of business merger, not some stupid ass token merger, but a business merger with Cardano. And so would Algorand. Cosmos, I don't know if it's as easy to integrate, but Cosmos right now, it's my favorite layer one as far as just ease of use. Yeah, all those guys were pushing Luna. Like, real quick, everyone. Let's just do some quick homie math. You guys ready for homie math? Okay. Is there any asset that can pay you 20% year on year indefinitely, and everything's fine? 20% year on year on a stable coin. So that means you put money in with your stable coin, they're making more than 20%. So they got to make something for themselves. Is there any universe where 20% year on year makes any damn sense, especially in a stable coin? Now you could say, well, in a company might end up doing 20% year on year or even better because of expansion. That makes sense. You could expand a company, but you couldn't guarantee that. There is no universe where you can take a stable coin and invest in safe avenues with a stable coin. There's just no way. You can do the math on that. I wonder if I can pull up my calculator on the screen just to show you how freaking absurd it is. Let me see. Where's my little calculator app? Where are you? Where are you, sucker? Just have it on my screen. Hold on. See a calculator. Open. Okay, let's see. We're going to play a game. Let me see if I can add. Stop my screen share. Let me present. Let me window. Oh yeah. Yeah. Okay. Everyone ready? This is going to be good. Okay. So someone just throw out our investment in UST. What's our investment going to be? Shall we say $10,000? I had a client that put a lot more in there. It was bad. We got him out, but it was, he had basically, if he had not acted that day, it was all gone. And when I say all, I mean all, a lot. 11,200 deal. Well played, Howard. We're starting with 11,200. Check. Okay. So with our 11,200, we're going to multiply it times, anyone know how to do the math on this? 1.2, right? Because the original. And then there's our 20% right there. Okay. We could say 1.20 for those of you that wanted to make sense. Equals. So year one, you're at 1340. Let's just say we did this for, I don't know, 10 years. You're getting 20%. Why would you pull out, right? So that's year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we're at $69,347. 69,000 on Howard's original $11,000 investment. So let's just get some. Yeah. You want to go 10 more years to see? Because again, well, it's not the rule of 7 when you're dealing with 20%, is it? You're no longer at the rule of 7. So then you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in 20 years, a measly 20 years, you're at 429,000. 429,000. Think about that for a second. We started with 11,000 20 years ago. You want to go another 10 years? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're at 2.6 million. I guess none of these dummies decided that math was, like, you guys want to do math today and look at how stupid. Oh, you can do this with any of these products that just guarantee these stupid returns. You just get your little calculator and just keep pushing the equal sign. And it is beyond obvious. It is absurdly obvious. When you want to go to 40, what the hell, right? Let's call it a retirement. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. At 40 years, you have 16 million. Yes. Want to go to 50 years? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. Good news, Howard. Your $11,200 is now worth $101,924,907. That $101 million. Anybody here think they can't make it work with $101 million? It's so stupid. It's so stupid. Oh, and by the way, that's just the money they got to pay Howard. What about all the other people? You guys realize they had hoovered up billions. This is how stupid people are. You manage money. Come on, man. I think we got the point. Oh, wait, what's that? Settings. What's that? Ooh. Smooth the background. What? Interesting. Anyway, let's go back to our screen. So, with this guy, to keep up with inflation, you really have to be pretty stupid to be fleeced by these things. If you just extrapolate them out just a little bit, then they seem really stupid. And so I would urge you all just to grab a calculator whenever somebody, because look, this thing was 20%, but you were getting paid in real time. You were getting paid compounded. So I don't even want to do the math on that, but the frequency of compounds is much more than 20%. It equaled a number so bad that even when I heard it, I was on it's the same thing with Celsius. They were guaranteeing 8%. and it was me, Alex was on the call. I don't know if Josh was there, but it was a few of us. And we're on this call, and Alex Mashinsky was there, but he wasn't saying too much. And one of his tech guys was there. It was a Clubhouse thing. And I said, well, how do you guys guarantee 8%? They're like, well, we invest it. I go, what do you mean invest it? We lend it. It took like 25 questions that we finally got to. We lend it. I go, who do you lend it to? Who's borrowing dollars at 8? Remember, this is 2021, 2022. Who's borrowing dollars at 8% when rates are, zero, effing zero? So who's borrowing at 8 when you can go borrow at like, zero? And it's like, oh, well, so after 14 more questions, hedge funds. Hedge funds are borrowing from you guys. Why are they borrowing? Well, that doesn't make any. Oh, well, they're shorting. These guys are traditionally shorting assets, so they borrow, and that's the collateral for shorting. It's like, wait. So as the market goes up, you're guaranteeing our 8% return on the premise that you're going to lend at higher than 8%, because you got to pay me 8. So if you got to pay me 8, you got to make more. So you're lending at more than 8% to hedge funds that are shorting assets in this market in crypto with leverage. Yes. I'm like, that is the dumbest thing I've ever heard. That is so stupid. And it wasn't just me. A lot of people were like, that's really stupid. And that's when Alex Mashinsky's like, I have 200 millions of my own monies on the platform. I'm not worried. Yeah, I know you're not worried. You're the thief, Alex. You're the crook. Of course you're not worried. It's your cookie jar, dummy. All these dudes were pushing Celsius. It got so bad that at one point on Clubhouse, back for the 13 seconds that Clubhouse was interesting, that that everybody in these chats changed their profile picture to Alex Mashinsky. And they had all these little memes and little GIFs and all this kind of stuff. They thought it was really funny. I was like, you guys are all morons. And, God. And then they all got destroyed, obviously, because the whole thing went under. So they all got destroyed. Those guys destroyed so many other people. Same thing with Luna. Everyone got destroyed. And what do you think Raul and these other douchebags do then? Do you think they go say, my bad? No, what they do is they defend these guys, and then they just get quiet about it to the point where they start to relocate themselves from the promoter, because for likely, not for certain, but for likely, they were all getting paid. They were all getting paid for promotion, especially Raul. You don't know. You assume with a high degree of certainty. Anyway, so then they slowly back off of it. They don't talk about it. Then they just relocate to themselves like, oh yeah, I lost money too. No, you didn't. You lost money because you were paid, and then what you were paid went to zeros. Yeah, you lost imaginary money. Everybody else lost money that they traded their life for. This is why Raul, and I've caught those guys pulling shenanigans before too. Those guys are all scumbags. God, it's just like every time. Let me see how much Hypercycle 1 license would be worth in the same amount of time. Oh, well, God, in 50 years, don't do that. Just do 20 years. Do 10 years. The 69,000. So, and also one license wouldn't be, you have to do 10. So if you do 10, I'll pull up my calculator and do the 10. If you did 10, let me clear this crap out. Calculator math is fun. Okay, so if we had 10, so we have to factor in 10, let's say at the worst case, let's say, so 1,200 on that plus, let's go 10 times 1, 0, 2, 4 plus 1,200. So your investment before before your compute expenses is 1140. No, it's not, because the tokens are at a discount. So hold on, 10240 times point. We'll call it 50 cents plus 1200. So you're only okay. So for 10 nodes, 10 hypercycle licenses plus tokens, you're at like $6,300. And let's say each of those nodes. So just remember, we're at $6,300. Each of those nodes is making, let's say it's making $10 a month. And let's just forget about where you're putting it, how you're putting it. Let's just say that you're netting $10 a month. Okay. And yes, you could say, well, I'm going to run it on my own computer and all this kind of crap. Yeah, but you have to pay for the computer and all this kind of stuff. So let's not deal in so many vagaries. Let's just keep it simple. $10 a month on your 10, right? So you're making $100 a month. So for the first year, you made 1,200, right? So we just go by the years. And let's just say that it took you a full year to get your split. Let's just say you were slow on the split. You were not even at the 6-month mark. You were at the 12-month mark, right? So you're at 10 on 10, right? So it's 100. So you're at 1,200 a year. So we go 1,200. And then we get a split. And so year 2, we're making 2,400. Then you get a split. Year 3, year 4, but you see the splits. So you go 10 becomes 20, becomes 40, becomes 80. So instead of having a simple compounded interest effect, you have a logarithmic compounded effect. That's good. That node math, because then you're at, within 5 years, you're at 1,0,2,4,0 nodes making $10 a month times 12 months. So you're racking at that point, let's call it 10 years in, you're at 1.2 million. You're at 1.228, 1,228,800 a year on those 10. And then that goes pretty much in perpetuity. So you're racking $1 million. Again, that's on the premise of $10 per node per month. Okay. So if it's more, well, you're doing great. If it's less, you're doing less great. But anyway, 1.228 million. 1.2 million. 1,228,800. And you don't even have to cheat or lie or steal from a bunch of people. Ain't that crazy? Voodoo, man. Oh yeah, Raul's super in bed with the Solana guys. I mean, look, Raul's a dumpster fire salesman, man. He's a scumbag. He's been caught in lie. There's you guys realize when these guys that are former hedge fund managers, when they can't spin up money, you got to wonder why that is. People that were released from Goldman Sachs. Goldman Sachs is the scammiest, darkest pile of crappy, dirty scoundrels on the planet. You get fired from Goldman Sachs, you suck at everything. I mean, everything. You suck at everything. Because it's almost impossible. It's like getting fired from hell. It's like they're like, kick him out of hell, man. Just stop. You're so bad at everything. You're too inept to work in hell. So like, Jesus, man. So you see these guys, there's a big group of them. And what happens is they just become internet people. And then I guess in their little flock, well, his flock is big, so they've done a lot of marketing. Their flock is, and it sucks too, because there are some good interviewers that they've hired at Real Vision. It's just that he's such a creep. Oh, and his co-founders are creeps too, like really sketchy. And then you look at all the people, like with the Luna situation, you look at all the people that were involved. It's a lot of people that you recognize. You're like, wait a minute, they were in on this. The LFG, the Luna Foundation Guard. It's the same. It's Novogratz and his douchebaggery his Canadian crap fund, Galaxy. It's Raul and his buddies. Like, they were all in on these scams, man. And you're like, oh, well, they didn't know. Really? Then if they didn't know, then they're stupid and you shouldn't listen to what they say. And if they did know, then they're crooks. Like, you're either a criminal or an idiot. You can't be both, and you can't be neither. Well, I guess you could be a criminal and an idiot, but you wouldn't be very good at criminaling. Yeah, that's right. That's right. You nailed it, Joe. They're always like, yeah, we're tired of Wall Street. We want to help the little guy. We're going to help you get ahead. Oh, really? You're hiding on a non-extradition island, Raul. Why is that, I wonder? Oh, because I like the weather. No, you don't, scumbag. I like the weather. You wish you were back in Spain. Quit it. What a douche. Anyway, yeah. I got interviewed for a job there back in the before Monday Morning Live, when in the Red Bull days. And it was a pretty funny story. I outed him for pulling a scam, his co-founder buddy, and then they booted me off their platform, which they told me to set up an account. Anyway, whatever. Stupid. I got kicked. Listen, I got kicked out of a game of population, a private game of Population 1 yesterday for killing too many people. And the rules that they set up. So look, just real quick, just listen to me. I know this is a derivative, but listen. They set up these rooms. There's a room moderator. The moderator creates the rules for the room for each game. You can adjust the weapon selection. You can adjust gravity. You can adjust some things. So they typically, whatever, they adjust the damage, how fast the characters, they do. So in a private room where the moderator gets to select how they're going to adjust the game, they adjusted it in a way, which I warned them. I said, if you do this, you're going to get owned. They did the adjustment. They have these things called kill streaks. You kill a few people, you get a kill streak benefit. One of them is radar, where you can see other people behind walls, which is pretty stupid. It's like thermal imaging. So I killed more people quicker and I got radar. And then I got this other thing, which I didn't even know existed, called like super speed, and then invisibility. So pretty quick, the game got out of hand and they booted me. They didn't just stop the game because you can just vote to end the game. No. They kicked me out of the game for killing too many people. I thought, well, maybe this was a mistake. I tried to log back in, immediately booted back out. Banned for killing. I'm basically a war criminal in Population 1. How badass is that? It's like the greatest honor. Anyway, I unfriended all those douchebags. But yeah, I got booted. I got real visioned. Damn. Anyway, as I look at the markets, let me just sum this up before we talk. We'll start talking game theory and cognitive bias, because we need to make sure we're sticking to the basics. I look at this now as an investable market. I look at this place as something that you can start. I've always contended we were not quite in a bull market. We just hadn't broken into a bull market, I felt like. So I still contend that's the case. And I think there's a lot of things that you can focus on. If I was focusing on stuff, and again, I'm not going to give specifics, but if I was focusing on where to invest as a newer investor into the crypto space, thinking, man, did I miss it? Am I too late? And all that kind of stuff. I would have obviously some whatever you would call sound-ish money in the corn. I would have some pre-ETF Ethereum. And then everything else, I would go and decide, do you believe in the AI story? Do you believe AI is going to continue to swallow the world? If you do, get some AI exposure. And I won't give you individual companies because I don't really know beyond the meminess of it. The basket is just a few, and that's Fetch, somewhat. They would tell you Graph, but that's a lie. They would tell you Render, but that's also a lie. AGIX, it's a meme coin, as we all know, but it's an AI meme coin. It's a cool one. Ocean, it's data. I don't know if it's AI specifically, but it's data. And then infrastructure AI. But remember, you're buying Hypercycle not because token go up. You're buying it to actually run the business side of Hypercycle. So I still think that's a different proposition. Maybe in the future, there's going to be some different implementations of Hypercycle that are going to be unique and interesting. But yeah, all this other crap's kind of crap. I would say if you like the data story, look at data. Look at and the best way to do these, whenever you're curious, go to CoinMarketCap. Here's what I do. And I'll go, okay, let me cruise over here to CoinMarketCap if it doesn't make me log in. Okay, cool. And I'll just go like data. Okay, let's see. Okay, streamer markets. I don't know what the hell that is. That doesn't sound like data to me. Let's go big data. And this, I just kind of start looking things up this way. I say, okay, well, let's see. AI data. Now see if there's anything on there that looks interesting to look at. Crypto assets. Categories. AI and big data. Let's take a look. What do we got? Okay, this is by market cap. Near, which there's nothing AI about Near. There's nothing AI about Near. It's a layer one. It's a quality one, but it's not. There's zero to do with AI. Zero to do with AI. Injective, somewhat. Yes. Graph, nope. That's an Ethereum play. Nothing to do with AI. Bit sensors, maybe. Theta, not at all. Like not even close. It's a distributed TV network thing. So that's definitely not. Fetch, yes. Singularity Net, yes. Oasis, kind of. Akash, yes, maybe. Theta Fuel, no. Gollum, no. Arkham, no. Echelon, no. Ocean, not directly. It's more like, it's more data. And then you just get further down the list and you're in the crap. You probably shouldn't go below like the top, 100. But anyway, there you go. So that's what you can do is you can just look up on CoinMarket. And then when you go into the asset, you say, well, I want to learn about Near. Maybe it's cool. Maybe it's more than just flagrantly spending all of their money on yacht sale advertisements. Like it's all, you just find their crap on yachts. You're like, what is this crap? These are the markets where it trades. This is the news, which is cool. Coin similar. About. Go to the about section. This is where you can do your 5 T's. So you can look at, it's a layer 1 blockchain that was designed as a community-run cloud computing platform that eliminates some of the limitations that have been boggling competing blockchains, such as low transaction speeds, low throughput, and poor interoperability. You see the word artificial intelligence anywhere in there? Anywhere? This provides ideal environment for dApps and creates developer user-friendly platform. For instance, Near uses human-readable account names. Whoa! Human-readable account names? That's crazy. Wait, unlike the cryptographic wallet addresses common to Ethereum. Except that I have nickblack.eth. That doesn't count? Anyway, Near also introduces unique solutions to scaling problems, has its own consensus mechanism called Doomslug. Okay. It's being built by the Near Collective, a community that's updating additional code and releasing updates to the ecosystem. Its declared goal is to build a platform that is secure enough to manage high-value assets like money or identity and performant enough to make them useful for everyday people. Does that say anything about artificial intelligence at all? No. So anyway, this is kind of what I do when I'm banging around these things. So I just kind of go and look and see if that makes sense. If not, I go back to the list. And this isn't the one-stop shop. But that's just a place where you could get some ideas and start looking through them. But don't go below 100. They're probably crap. I mean, I don't know. Is there anything down here? Ocean was the only thing that might be quality underneath that. The market cap is dust. So Flux, I remember when that was almost a good play. We actually made some money off Flux. That was the in the Monday morning live days. I don't see anything else here that's interesting. It's all bullshit. There's a lot of coins, man. Look how far the list goes. Look at all that noise. Remember Matrix AI? That sucker, that old spammy. That was like a meme coin, a kind of a spammy, scammy meme coin in AI. And it was always going from like 1 cent to like 5 cents. Let's see. Let's go back. Let's go look at the all-time. God, look at that. Look at those people that got destroyed. Destroyed. $1. Can you imagine? This thing's sitting around half a penny. It would go, oh yeah, it went up to like 5 cents. And it'll come back down. Had a recent spike to 5 cents again. Back down. I was trading back and forth Matrix AI to NewNet. Every time Matrix AI would go over NewNet, I would sell it and buy NewNet. Every time NewNet would go, and then finally Matrix got so spammy that I couldn't even do that. Spammy old dumpster fire. Anyway, yeah. Well, I don't know how they aggregate their stuff. I don't know how they do their list over at CoinMarketCap. I just know that that's one of the places I'll go when I've got just a wild hair. Yeah. Let's see. After a year and a double. Well, remember though, Mashinsky was promising this based on lending. Their whole thing was lending to sketchy hedge funds, okay, that are shorting the market while the market's going up. All those funds got blown up. Celsius got blown up because you can't do that. You can't with a stable coin, with a US dollar. You can't guarantee more than Fed funds. You can't. Where are you going to get it? Oh, we're very clever with our lending. Bullshit. Doesn't make any sense. It doesn't pass the smell test, man. So yeah. Anyway, okay. So let's switch gears a little bit. When this is an investable market, and these aren't the only assets. As you saw, there's tens of thousands of them. Ooh, look at all those sixes. Ooh, evil. Yeah, I mean, this is an investable market. Don't get caught up too much in the day-to-day vacillations. Like I was looking to add, I had added some Storage A. Yay. Well, right around here. Matter of fact, it was almost this exact price 2 days ago. And then I was going to add, I thought about adding some Jupiter at 91 cents. Yesterday it was $1. Now it's down to 91 cents. Arweave finally starting to give up the ghost. You can't fake it forever, I suppose. But yeah, when you see days like this is just a broad sell-off. It's just of course, we had the opposite yesterday, but start looking out to the 90-day, and that'll start telling you where you can invest. And I think if you look at the 90-day, just as a general rule, and you say, okay, well, what are the worst performers that I think are quality? So you just go through that list and find the things. And again, these are all assets that you're following, but find the things that you believe are quality. And those are the things that you might want to throw some Skrilla at. Like, yeah, there you go. There you go. It's that easy. Okay, let's switch gears. Let's go do some classroom work. Let's forget about money for a second. Let's forget about money and talk about money. Oh, wait, the same thing.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Bad at math. That is a Rube Goldberg machine. Anyone? Rube Goldberg machine? Overly sophisticated machine that doesn't accomplish much. Anyway, all right. Today we are going to talk about a couple of concepts that should be bedrock to your decision making. So these are things that impact your daily life. They also impact your financial daily life, right? Your financial decisions, your investment decisions. So they are game theory, cognitive bias, and the you could say arbitrage, but essentially we're trying to get to a point of compounded interest. We want to understand the effects of compounding interest and how we can find ways to benefit from that. And they're all over the place. We even talk about the compounding intellect kind of interest that you can gain. But by understanding the broad concepts, you can develop a pretty good wealth mindset that will help you make smarter decisions and build a future where you not have to be as reliant on other people or not reliant at all, which is also so good. So game theory is the very bottom layer, right? This is our decision layer. So game theory, this is our consensus mechanism, right? Game theory is the study of strategic decision-making, or SIPG, right? And just before I say it, SIPG, what does that mean? The strategic interactions between players in a game, interactions or interdependencies. So it helps us understand how individuals or groups make choices that impact one another. So think of it like a game where every move you make affects every other player, and the moves that they make are going to affect you and the moves that you're going to make. Everybody is interdependent and interconnected. Oh God, sheep going to the moon? Depends. If the moon is below, could fall down to the moon. Anyway, so why is game theory important? Well, in daily life, it helps you make better decisions by considering all of the potential actions and reactions of others. It also makes you kind of more aware that you're not making decisions in a vacuum, and other people are not also, in an intellectual vacuum, they may be, but all of the things that you do typically affect other people and what they do. So this kind of framework of game theory allows us to predict market and social behavior and make informed choices about where to allocate our resources, scarce resources. And yes, rational players. That's correct, Barry. It's important to know that. It's rational players. Matter of fact, game theory, the kind of, when you start to think about game theory on a regular basis, you start to accidentally make better decisions. So it creates tendencies, right? Tendencies to think in certain ways that lead us to systematic deviation. So think about it like this. The kind of opposite of game theory, what gets in the way of good, analytical, communicative, open-minded, problem-solving, creative decision-making is cognitive bias. So it's like that's always what's steering us off of the path. And you want to be on a math-based, emotionless path, right? So you want to model the strategic interactions or interdependence between two or more players in a situation containing set rules and outcomes. And this is used, game theory is used in rational decision-making behavior in social science, in logic, computer science, evolutionary biology, all sorts of system studies. You can look at economic competition, economic phenomena like bargaining, mechanism design, which is the tail end, which is like the reverse of game theory. You can look at how auctions work, how people might game voting theory, experimental economics, political science, behavioral economics. You get it, right? This assumption that mostly players would be, or individuals you might come into contact with might be rational and have a goal of maximizing their outcomes. So it's assumed that players in a game will work to maximize their outcomes, right? That they are rational and that they strive to maximize their payoffs. That's what the assumption is, even if it's not always accurate. Because sometimes there are irrational players, but you can't you can't assume whimsy, right? That all we can say is what would dummies do, but there is a certain rationality to dummies. When people have a very limited amount of information and gambling is their assumption that I'm going to gamble and I'm going to maybe get rich. Well, they're still trying to maximize their payoffs. They're irrational through stupidity, but that's a known unknown. Insanity is a little bit tougher to game out. But you know what? Not everybody in the system is going to be insane. And so those are kind of little statistical deviations. But essentially, we make better decisions by considering the potential actions and reactions of others. So in daily life, like imagine you're part of a working group or like a business project or, whatever, and you choose to cooperate with your other fellow employees or group mates, right? You will likely achieve better results if you guys all cooperate. You'll reach something that looks like a Nash equilibrium where no one can further maximize their payoffs by doing anything different. And everybody is in a state of best aggregate payoff, right? So that's a good state to be in. And that's a cooperative kind of outcome. Because you can achieve better results together than you can competing. Then in your investment life, you can use game theory to predict basic market trends, the behavior of other investors, the behavior of less educated investors. And by understanding the patterns of those behaviors, they can make you a lot of money because your decisions become more profitable because you're front-running groupthink. You're front-running the masses. Front run. Okay, so when you're applying game theory, consider the potential reactions of others when you're making decisions. Also, maybe in the way that you implement those decisions. Like massive firings. Think that through. Not that you're not going to let them go, but think about the way you want that to look. Think about the way you want to present that to the populace. Anyway, try to look for win-win situations where all parties can benefit. Doesn't have to be zero sum. And be strategic and try to stay several steps ahead of the rest of society. And so I think several steps is 12 to 18 months. If you're living 12 to 18 months ahead of everyone else, you're going to be just fine in your brain. All right. And then we mentioned briefly cognitive bias. And these are those systematic patterns of deviation from the norm or from rationality in judgment. Statistical deviations. We don't want that. And they affect the way that we perceive and the way we react to information. So, we talk about this, every few days. We'll say, okay, we'll talk about confirmation bias, where like you tend to seek out information that confirms the beliefs that you already had. Or anchoring bias, where you're relying too heavy on the first piece of information you got rather than new information that you might encounter. Can you imagine people that were like confirmation bias and anchoring bias based crime detectives? Like, oh man, they would not get much done. So why is an understanding of cognitive bias important? You're like, well, if it's so bad, why do I want to understand it? Because it helps you recognize when your decisions are being influenced by irrational thoughts or emotions. So when you're aware of your biases, you can make more objective and rational decisions. If you I cuss too much when I play video games, when I play, Population 1, although I've learned this and I turn my mic off. What's funny? When my microphone's off, I don't cuss as much because I'm like, well, what's the point? It doesn't have any utility. So the game theory is there in that I'm not getting the payoff from cursing somebody. So what's the point of cursing? Therefore, save the energy. So there's a lot of little systems being deployed, but I should have the focus and the concentration and the mental control to not have to cuss people out while I play. So I'm working on that. I'm working on not getting mad at the cat for crapping on the stairs every night. every night. He's got 3 litter boxes, giant ones. A human, these litter boxes are so big, a human could crap in them and be fine. He'd have plenty of space. He has these. He has litter boxes everywhere. But nope, he wants to crap on the stairs once a night. Just let me know. And not little craps either. It's a big cat, big craps every night. It makes me mad. I shouldn't be mad. He's a cat. But it still makes me mad. So I have to work on that. You have to be honest with yourself to recognize your own irrational behaviors, though. And so a lot of people, most people, are not big fans of admitting that they fall victim to cognitive bias, right? Like in your daily life, believing a rumor about somebody without verifying the facts because it aligns with your pre-existing opinions. Or in your investment life, overreacting to short-term market fluctuations because of recency bias, which leads us to place too much emphasis on recent events, which, taken in the grander view, might not be all that important. So like you wake up and the market's red. You're like, oh man, it's red. You get depressed. Well, were you going to sell today? No. Then what difference does it make? So like, come on, bro. Anyway, how do you combat cognitive bias? Be aware of the biases. Question your reactions. Just question your reactions. Whenever you have any kind of outburst, good or bad, question it. Like, oh, was that warranted? Am I overly celebrating or overly angry or overly punishing or, overly anything's not good. Hang on tightly, let go lightly. Seek out diverse perspectives and information. You don't have to weigh them the same, but at least be exposed to them so that you can filter them and say, well, that's a legitimate, diverse perspective. Or that's Raoul Pal and Novogratz and a bunch of dummies. Dummying so that we buy the crap that they got sold at a discount for promoting, which should be illegal, but isn't for whatever reason. I'm not sure why. Take time to reflect on your decisions and avoid making hasty choices. You always have time. Go slow. And then real quick, just since we were talking about compounding interest, let's have a little nod to it. Compounding interest is the process. It's a process where the value of an investment grows exponentially over time. As the earnings on an investment generate their own earnings, right? So think of your currency units as employees. And when you get enough of them together, they have babies. And then you start like a little currency sweatshop. And then their babies are working for you. And then their babies are working for you. Often called, you've heard this, the eighth wonder of the world because of the powerful kind of impact on wealth accumulation. There's a great Einstein quote about like those that don't understand compound interest are likely paying it. Anyway, it's something to that effect. Einstein, pretty clever fella. Anyway, why is compound interest so important? It can significantly increase the value of your investments over time. And it's in a way that's passive where you don't have to do so much work. I mean, you have to manage, but you don't have to, you're not in there like, doing, manual labor, right? So those who understand compounding interest can use it to their advantage. And those who don't, they are paying for it through debt service. So like if you invest $1,000 in an annual interest rate of 5%, after 20 years, it'll grow to about $2,653 at 5%. Conversely, if you owe $1,000 on a credit card with a 5-year annual interest, and by the way, that's not what interest rates are on credit cards. Interest rates on credit cards start at like 12% and go to like the high 20s. The numbers are astronomical because it compounds. So those numbers that we saw, remember the 8%, the 20% number? On a credit card, it's the same thing. If you don't pay, I know it sounds stupid, but they would never let it get this far. But if you didn't pay, technically, an $11,000 credit card bill on a high interest credit, they would send you to collections. But in 50 years, you'd owe $100 million. It's the same math in reverse. You made it or you owe it. So in harnessing the power of compound interest, invest early to maximize the benefits of that compounding. Make regular contributions to your investments through dollar cost averaging, right? Rules-based entry, rules-based exit. Avoid high interest debt. Avoid any debt, honestly, unless it's like, and even, I don't know, man, even a home loan, but avoid debt, especially consumer credit debt. So that you're not just paying interest to other people, right? There you go. So by understanding and applying game theory, being mindful of cognitive bias, and leveraging the power of compound interest, the eighth wonder of the world, you can develop a more wealth mindset that will, and look, when the average person looks at money as a way to pay bills. Okay, money pays bills. That's what money is. Money. I use money to pay my bills. Then I go make more money and pay more bills. That's what money is. Okay. That's the Joe six-pack average Americana. That's the average person. Money pays bills. Rich people, money makes money. Okay? I get money to make more money, hopefully through passive income streams, brilliant investments, front-running groupthink, and understanding the value and merit of compound interest, right? Money makes money. That's what rich people think. Poor people, regular people, it is what it is. Money pays bills. Rich people, money makes money. Wealthy people, money buys time. That's the commodity. So you got to decide where you're at on that. But all of us have to go through all of those, unless you're born into wealth, in which case, well done. Well done. So, try to develop a more wealth-based mindset where you're employing game theory as your mindset for thinking, right? Be aware of your cognitive biases. Don't sleep on the power of compound interest. Front-run groupthink, and buy your time back. Bam. And that's all I have to say about that. Okay. Stay in school. Don't do drugs. Don't do anything my poor, insolvent, drunk, struggling on meth grandmother wouldn't do. Grifter ass as she is. She would sell you this machine. She would lie to you and say it's awesome, and she would sell it to you. You would buy it. She's a crook. Although she's dead now. But you know what? If you use a Ouija board, there's a good chance she's going to jump on there and try to steal your shit. Have you sending money off into the netherworld? So don't do it. She's bad. We'll have some more news on Twin Protocol tomorrow, I think. I think we'll have news on Twin Protocol tomorrow. Not sure. Have to ask Brandon, but very likely. What happened to Ravencoin? Raven's crap. That's it. Nothing. It's crap. It's been crap. It's run by well-intentioned fools. Anyway, stay in school. Yeah, just stay in school. Stay in school forever. Don't even leave. We'll see you tomorrow.
If you're an accredited investor and you want in on angel, seed round, or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first. Being first is so much easier. Schedule a digital private client interview today at nickblacknext.com.